My pleasure.
Let's begin by looking at Kenya Airways. I read a post from the airline today saying they had 1.6 million shares traded, no more supply. The share was up about 9.5% today. 23% of that was foreign buying. Now, this means there is a demand by local buyers. What's your analysis of Kenya Airways?
Currently, at the stock market, it's the best placed counter in terms of fundamental and basically options in terms of looking at a stock that has good options in terms of why one should actually invest in it. And looking at other stocks compared to KQ1, because of the World Cup 2010 that's coming up in the next maybe 80 days or so, looking at how they've come up with an impressive strategy for the African routes to be able to capitalize on the 2010 World Cup, being able to see that I think they learned a lesson from how they hedged the fuel a couple of quarters ago, and now I think basically the market share in terms of African business is actually improving. Local business is actually also improving. Management has been streamlined, and the share price is actually going up because a lot of foreigners actually understand the aspect of why KQ is such a good counter. They've snapped up all of it.
Okay, Access Kenya profits down 31%, and there are two pertinent questions. Was it a case of acquisition indigestion after taking an open view, or or did they inherit a shell? We had the MD last week. He said it was a bitter pill for the company. The IT business has suffered. What's your take on Access Kenya, especially after the buzz it made being the only ICT stock on the NSE?
I think looking at Access Kenya, one needs to understand that for the last 1 year, they've actually been on an expanding spree. OpenView was a good business for them. Unfortunately, for any investment, it just doesn't pick up immediately. Once you're being acclimatized to another company, it actually takes a while before the same companies can have similar synergy in terms of market share, in terms of growth strategy, and the way forward. And I believe Access Kenya's issues are, one, it's taken a while for OpenView to actually capitalize on what they thought it will actually perform, and two, their massive investment into the fiber optics business, especially in terms of laying down the infrastructure so that they can be able to take advantage of it.
Let's look at Nation Media Group. It posted results as well, and it is interesting to note that sales during the period fell to 8.19 billion. That's from 2.25 billion the year earlier. Companies now seeking to cross-list across the East African region, perhaps to increase its visibility here. Do you think that's the right move for NMG, keeping in mind that most of the cross-listed stocks are traded mostly from the NSE?
I believe for a media house of such magnitude, I think a cross-listing is good for it because one, we're looking at having the East African countries actually integrate into one, and Nation Media is actually probably positioning itself to be the leading media house in East Africa region, because when you look at the newspapers that are actually read around the East Africa, most of them are actually owned by the Nation Media Group. And also when you look at it in terms of competition, apart from the Standard Group, I don't think there's any other media house in East Africa that actually is giving its competition. So what they're doing basically, like any other company that's listed on the stock market, trying to expand its tenterhooks into the rest of the East African region.